Good day, everyone, and welcome to Qiwi's first quarter 2020 earnings conference call. Today's conference is being recorded. At this time, I would like to turn the call over to Varvara Kiseleva, Interim Chief Financial Officer of Qiwi. Please go ahead.
Thank you, operator, and good morning, everyone. Welcome to the Qiwi first quarter earnings call. I am Varvara Kiseleva, Interim Chief Financial Officer, and with me today are Boris, our Chief Executive Officer, and Andrei Protopopov, Chief Executive Officer of the Payment Services segment. A replay of this call will be available until Wednesday, June 3, 2020. Access information for the replay is listed in today's earnings press release, which is available on our investor relations website at investor.qiwi.com. For those listening to the replay, this call was held and recorded on May 20, 2020. Before we begin, I would like to remind everyone that this call may contain forward-looking statements as they are defined under the Private Securities Litigation Reform Act of 1995. These forward-looking statements about our expectations for future performance are subject to known and unknown risks and uncertainties. Qiwi cautions that these statements are not guarantees of future performance. All forward-looking statements made today reflect our current expectations only, and we undertake no obligation to update any statements to reflect the events that occur after this call. Please refer to the company's most recent annual report on Form 20-F filed with the Securities and Exchange Commission for factors that could cause our actual results to differ materially from any forward-looking statements. During today's call, management will provide certain information that will constitute non-IFRS financial measures, such as adjusted net revenue, adjusted EBITDA, adjusted net profit, and adjusted net profit per share. Reconciliations to IFRS measures and certain additional information are also included in today's earnings press release. With that, we'll begin by turning the call over to Boris, our Chief Executive Officer.
Thank you, Varvara, and good morning, everyone. Thanks for joining us today. Today, I would like to share our first quarter 2020 financial results with you. This quarter, we demonstrated robust performance. Even at the end of March, we have already started to see the negative impact of the COVID-19 and global lockdown on some of our segments and categories. It is fair to say that many of our key niches are impacted by the current crisis. For example, our payment services for betting merchants are affected by the suspension of the major sport events. Also, this project is under pressure from the general downturn in Russia, while Tochka is affected by the corresponding significant decline in the SME activity. Many categories like payment services for online games and projects like factoring and lottery show resilience in these troubling times and demonstrate steady growth trends. Despite the global challenges all of us are facing now, we believe that our performance proves the value and relevance of the payment ecosystem and digital solutions we have developed so far and aim to develop further. As an omni-channel provider of digital payments and financial services, we were able to continue offering our services to our customers, merchants, and partners in full and without any interruption. Moreover, we believe that some of our key categories and niches, though negatively affected by the ongoing crisis, may be well positioned to show fast and steady recovery as soon as the situation normalizes. At the same time, we continue to focus on optimizing our operations and implementing stricter cost controls across the group. We have prioritized the health and well-being of our employees, while also supporting our clients and partners within our ecosystem during these challenging times. With the absolute majority of our employees working remotely since mid-March, I'm glad to know that our business has continued to operate smoothly across all projects, including the planned wind down of Rocket Bank operations. Even though we already began to see the first signs of recovery, including the restart of some major national soccer leagues, we remain cautious that the next couple of quarters will be challenging. However, we believe that we have proved many times before that we have created a resilient ecosystem that is highly adaptive and consumer-oriented. We will continue to develop it further by targeting our core niches and areas of expertise and creating new use cases well fitted to serve our users, merchants, and partners. Now, to sum operations, the total net revenue increased by 70% to reach 6.3 billion rubles, 5.4 billion rubles in the first quarter of 2019. The increase was mainly driven by payment services and consumer financial services segments net revenue growth. This growth was slightly offset by the technical decrease in Tochka project net revenue. Andrei will discuss the performance of payment service segment in a minute, while I will walk you through the results of our other segments. Consumer financial services segment payment volume reached 8.8 billion rubles for the first quarter of 2020, increasing by 76% as compared to the same period of the prior year. Segment net revenue was 566 million rubles as compared to 218 million rubles in the first quarter of the previous year. Our loan portfolio reached over 8.5 billion rubles as of March 31st, 2020. Service projects have demonstrated strong financial results in the first quarter of 2020, simultaneously increasing the credit portfolio and improving consumer monetization. However, we already see the current crisis is having a substantial effect on both consumer activity and purchasing power. We are taking all necessary actions to optimize our credit exposure as well as the overall operations of the projects. We believe that our efforts are currently sufficient to mitigate key risks and uncertainties. We are actively monitoring the behavior of our clients. As of now, we are managing the portfolio and credit limits very tightly. We are taking a conservative approach towards our lending business and do not see any critical changes in portfolio quality or consumer behavior as of now. We will continue to closely monitor the situation. At the same time, we continue to explore partnership opportunities to support the scaling of the project. We are also developing different strategies aimed at refocusing the project on offering customized products and services to clients in the niches core to our payment services segment. Corporate and other category segment net revenue, which includes primarily Qiwi Bank net revenue of the Tochka project JV, net revenue from account receivable financial and digital bank guarantee products of Factoring Plus project, and net revenue of Flock3 SaaS platform was 350 million rubles as compared to 476 million rubles in the first quarter of the prior year. The decline was driven by the technical decrease of the Tochka project net revenue, offset by contribution of other projects. Further, I would like to give you a brief update on the latest developments in the relation of the Rocket Bank wind down process. In March 2020, the board decided to wind down Rocket operations. We have commenced this process and are currently proceeding following the initial wind down plan. As a part of the measures, we have terminated marketing activities, including the cancellation of the Rocket Bank loyalty program, significantly increased tariffs, and are currently reducing the headcount of the project. We have already seen a significant decline in the number of Rocket Bank customers as well as corresponding account balances. We believe that the winding down of the current Rocket Bank B2C service offering the finalize in the next 3 to 6 months. At the same time, we continue to review the most efficient way to reduce or dispose of Rocket Bank assets. We are currently piloting certain projects earlier developed in Rocket Bank in our payment service segment, particularly as part B2B2C product pipeline. Finally, yet importantly, I'm glad to announce that following the determination of the first quarter 2020 financial results and taking into consideration the current level of the uncertainty of our operating environment, our board of directors has approved the dividend of 14 cents per share. We remain committed to the target dividend payout ratio of at least 50% of the adjusted net profit for 2020, approved by the board in March 2020. The board of directors reserves the right to distribute the dividends quarterly as it deems necessary so that the total annual payout is in accordance with the targets provided. However, the payout ratios for each of the may vary and be above or below provided targets. Even in these challenging times, we see many opportunities both in payment space, in the adjustment markets, and I believe we are very well positioned to continue strengthening our ecosystem with the ultimate goal of securing our long-term growth prospects. With this, I will turn the call over to Andrei for an update of the payment services business. Andrei?
Thank you, Boris, and good morning, everyone. It's my pleasure to be here with you today. Now, on to the results of our payment service segment. For the first quarter 2020, our payment service segment volume increased by 14% to reach 370 billion rubles, driven by significant growth in money remitters and e-commerce categories, which grew 24% and 18% respectively. The growth in e-commerce and money remittance verticals was largely driven by the development of our key streams, including digital entertainment, self-employed, and sharing economy partners. As Boris mentioned earlier, in the second half of March, we started to see the impact of the coronavirus crisis on our key payment categories, including primarily services for betting merchants. Other categories, such as travel and ticketing, services we provide to taxi companies and drivers, were affected by lockdowns and other restrictions as well. On the other hand, certain categories, such as, for example, online games and physical e-commerce, are demonstrating strong growth rates during the lockdown. Generally, we believe that most of our categories, such as digital entertainment and to a large extent services for the self-employed, though negatively affected by the crisis, may be well positioned to show good recovery rates as soon as the restrictions are lifted. At the same time, certain categories, such as, for example, money remittance, remain sensitive to the general level of economic activity and may be pressured by the decrease of such for a longer period. To put in short, we currently see and will likely continue to see mixed trends across our key streams. Overall, taking into account challenges we all are facing due to the lockdown and social distancing, we expect that the importance of digital solutions and payments will continue to increase in the near future. We are taking this chance to review and strengthen our product pipeline and suite of services we offer, and believe that we will be able to find new niches as a result of this crisis. Going back to the first quarter results, payment service segment net revenue increased 10% to reach 5.3 billion rubles compared to 4.8 billion rubles the prior year. Payment service payment adjusted net revenue increased 10% to 4.6 billion rubles, up from 4.2 billion rubles in the prior year, primarily as a result of net revenue growth in our money remittance and e-commerce verticals, which grew 11% and 10% respectively. Our financial results were predominantly driven by the volume growth in money remittance and e-commerce categories. Our payment average adjusted net revenue yield was down by 4 basis points year over year to 1.24%, driven by the yield decline in e-commerce and money remittance market verticals. The yield decline resulted primarily from scaling of our business that came largely through offering our merchants and partners new services, such as online acquiring. Such services have lower commissions than our key wallet solutions. The growth of this new product stream diluted our payment average adjusted net revenue yield primarily in the e-commerce category, while the commissions we charge in our core solutions remain stable. Payment services other adjusted net revenue increased 10% to 727 million rubles as compared to 661 million in the prior year as a result of growth of revenue from fees from inactive accounts and unclaimed payments that was in line with the overall growth of our ecosystem and interest revenue. As Boris mentioned earlier, our growth was driven by the robust performance we have achieved in our key strategic streams and through the expansion and enhancement of the product proposition we offer. Surely, at the moment, we see many challenges imposed primarily by the coronavirus crisis and corresponding lockdown worldwide ahead of us. Even though we are starting to see some of the restrictions are being lifted, we remain cautious. We believe that we are well positioned to continue to grow our business, enrich our suite of services, develop new niches, and create new use cases for our users, merchants, and partners. We are doing our best to improve and optimize our operations in order to lay a groundwork for the longer-term growth. With this, I will pass over to Varvara for more details on the financial performance of the group. Varvara?
Thank you, Arthur. Moving on to expenses. This quarter, our payment services business continued to demonstrate strong operating performance and generate a substantial cash flow. At the same time, in the end of the first quarter, we have launched certain cost and process optimization initiatives, including the wind down of Pocket Bank operations, with the aim to improve the operating efficiency across our key operating segments. This being said, adjusted EBITDA for the first quarter 2020 decreased 2% to 2.3 billion rubles. Adjusted EBITDA margin was 37%, compared with 44% in the prior year. Adjusted EBITDA margin contraction primarily resulted from an increase of personal expenses in payment services, segments, and corporate and other categories, as well as growth of credit loss expenses mainly related to the Boris project. This was partially offset by the total adjusted net revenue growth, as well as by a decline in rent of premises and related utility expenses, and a decline in advertising, client acquisition, and related expenses. Group adjusted net profit increased 6% to 1.8 billion rubles from 1.7 billion rubles in the first quarter of the prior year. The growth of adjusted net profit was primarily driven by the same factors impacting adjusted EBITDA. Net profit was also affected by the following factors: share of gain of an associate and a joint venture, as opposed to share of loss of associate and a joint venture for the same period in the prior year, mostly related to Tochka JV, a net foreign exchange gain as compared to a net foreign exchange loss for the same period in the prior year, offset by higher income tax expense and other income expense net loss as compared to other income and expense net gain for the same period in the prior year. Payment services segment net profit increased 2% to 3.1 billion rubles compared with 3 billion rubles in the prior year, driven primarily by the payment services segment net revenue growth, offset by the increase of payroll and related taxes. Payment services segment net profit increased 2% to 3.5 billion rubles compared with 3 billion rubles in the prior year, driven primarily by payment services segment net revenue growth, offset by the increase of payroll and related taxes, excluding effects of share-based payments and foreign exchange loss. Consumer financial services segment net loss was 522 million rubles in the first quarter 2020 as compared to a net loss of 532 million rubles in the same period of the prior year, resulting primarily from segment net revenue growth offset by an increase in credit loss expenses. An increase in credit loss expenses was primarily driven by the 186 million ruble increase in expected credit loss allowance that was due to the adjustments made to our provisioning model in light of the expected operating environment and credit policy deterioration resulting from the global distress caused by COVID-19, falling oil prices and ruble devaluation, as well as by the expansion of our credit portfolio. Rocket Bank segment net loss was 660 million rubles, an increase of 35% compared to the net loss of 490 million rubles in the prior year, resulting primarily from an increase in payroll, including 142 million rubles severance payment provisions related to the wind-down process started in the end of the first quarter. Now on to our guidance. Firstly, I would like to remind everyone that at the moment we have limited visibility regarding the potential impact of the outbreak of the COVID-19 strain of coronavirus on our business, including the negative effect on the banking industry in general and our revenue generated from products and services we provide to our betting merchants caused by postponement and termination of the major sports events, as well as by the negative effects on the consumer lending market in Russia and corresponding impact on the service project. In addition, it is currently unclear how much consumer demand will be negatively affected from the outbreak of COVID-19 and what effect such outbreak will have on the macroeconomic environment as a whole. The full impact remains uncertain and will depend on the length and severity of the effects of the coronavirus on economic activity in our market. The full scope of negative impact that the abrupt decline in oil prices and resulting devaluation of the ruble may have on the Russian economy also remains unclear, but has the potential to be very significant. Our outlook reflects our current views and expectations only, and is based on the trend we see as of the day of this earnings call. If such trends were to deteriorate further, the impact on our business and operations could be more severe than currently expected. We continue to monitor the situation closely. Having said that, we reiterate our guidance in respect of the 2020 outlook. We expect group total net revenue to increase by 3 to 13% over 2019. Payment services segment net revenue to change by -3% to +5% over 2019, while adjusted net profit is expected to increase by 10 to 30% over 2019. Although we see our first quarter results as a solid foundation for the year, certain other factors remain beyond our control, and we reserve the right to revise guidance in the course of the year. With that, operator, please open up the call for questions.
Thank you. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. And for participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. Our first question is from Yuliana Lemvelskaya with UBS. Please proceed.
Hi, everyone. This is Yuliana from UBS. Firstly, is it possible for you to comment on the current trends, i.e. April and May so far? If possible, with numbers, and if not, can you maybe just describe the trajectory for payments or for the business altogether?
Our overall volumes and revenues, mainly behind betting merchants, as well as to a certain extent the self-employed categories like taxi drivers and some others, due to the cancellation of the sport event and lockdown. The major dynamics are more or less the same as April.
Hi, Juliana, it's Boris here. I just want you to make some comments regarding other segments of the business. You know that we are winding down Rocket, so it's the process is going well and according to the initial plan. That's nothing new about that. Regarding service, they performed quite well in the first quarter now. We see some deterioration in the quality of portfolio and also change in transactional behavior of the customer, but we are closely monitoring situation in service. As for other business units like Flocktory and Factoring, they really perform very well in April. Unfortunately, I'm afraid that I can't give you exact figures, but they perform well.
Okay, thank you. And secondly, there was a sequential decline in the number of active e-wallets for the first time ever. Can you please comment on that? What are the reasons?
We see it's not as a decline, it's more like saturation number. We said in the past that our key effort is not on the number of on the wallet per se, but on the key niches and streams that we are developing, digital entertainment and self-employed. And talking about those wallets, there is no decline, and actually the growth we demonstrate in the first quarter and the revenues and volumes and our key categories is behind those niches. So I would say that overall we are fine with the number of wallets.
Okay, and if I may, another question. What was the net cash position at the end of the quarter?
Favorite question. Thank you, Liana. Net cash position was around 40 million. The same basically as of the end of Q4.
And it's denominated in dollars, right?
The substantial part is denominated in dollars, but certain part is in rubles.
Okay, thank you.
Our next question is from Eldar Davletshin with Wood & Company. Please proceed.
Yes. Hi, everyone. Thank you for the opportunity to ask the question. So, could I ask, what was your revenue growth in January and February of this year, particularly in the payment segment before March? So that would be my first question. And I would also like to understand two more things. So your margin has declined quite substantially, and you mentioned additional personnel costs. Like, I'd like to understand if you could the numerical part, like what was the degree of this extra cost, and then more like what's the nature? Is it like bonuses to last related to prior year activity, and how much of it is a one-off in nature? So that would be my second question. And then the third would be, in general, like now that you've seen kind of the new reality, and you mentioned you are looking at new niches, like what do you think would be the most interesting opportunities? Have you identified them already, apart from betting, which was a big driver for you? So anything that, say, when the life goes back to normal, you could say that there is, I don't know, 10, 20, like a substantial percent of your revenue coming from new services that you developed during this crisis. Thank you.
Our next question is from Chris.
I'm sorry, we're answering the question still?
Yeah, we're still answering, yeah.
I'm
In
sorry.
fact, we haven't started yet. We haven't started yet. Just a quick answer to your question regarding first 2 months of the first quarter. The group figures are as follows: plus 17 in net revenue, and plus 30 in net profit compared to the first 2 months of 2019. And Andrei will comment the other question.
Yeah. So on the payment services, the growth was more or less the same that in the total quarter, because in the March we had some mixed effect of the I would say the kind of speed up of the growth before the lockdown started. So we saw kind of mixed effect in the March. So I would say that in total you can think of more or less the same growth numbers for the January, February for the payment service segment.
On the marginality, I'll comment, and to sum up a little bit the answer to the previous question, I would say that we started to feel the crisis only in the very end of March. So the growth rates that we demonstrated in the first quarter are representative mostly of the pre-crisis growth levels. The marginality and the personal cost, in payment services that primarily relates, so the growth primarily relates to the LTI program we have introduced in August 2019. So if you're looking on the first quarter 2020 versus first quarter 2019, this program is not included, was not present in the first quarter of 2019. The size, so the numerical value is roughly about 100 million. That's not a one-off. That's a program that we have introduced, and it will continue going forward because it's kind of a long-term incentive, longer-term incentive program for top and middle management. Hope this answers your question. For the new niches, I will pass on to Andrei to speak about it.
Yeah, I just found the exact number for January, February. It's actually several percent higher than the quarter, I would say. But just a several percent higher, the growth rate. And for the new niches, I would say that we are generally keep our focus on what we were talking previously. First one is digital entertainment, and we believe that overall the only category within digital entertainment that is heavily affected is sports betting, and it's a temporary effect. So in the future, it should be back to the normal situation, and we expect it to happen as soon as the sport event will be back. Secondly, and I think we have now even more opportunities in this area, is related to the self-employed businesses with the self-employed, both the payout to the self-employed by the different companies, and as well as self-employed of the new economics and new niches that are actively developing. So the current situation, again, after the lockdown is lifted, we believe will stimulate actually more part of the economics move to the self-employed part. So more companies will be trying to attract the self-employed versus the permanent workers. At the same time, the people that are currently losing their jobs or their income, they will be looking for the different type of the self-employment, including new niches. And all of this at the same time will be linked to the different type of digital communications, businesses, etc. And this is exactly the area where we are playing. So kind of looking more mid-term, I would say, we see the potential there to continue to develop our businesses regarding the self-employed.
Thank you.
Our next question is from Chris Kennedy with William Blair. You may proceed.
Yeah, thanks for taking the question, and hope all is well. I just wanted to dig more into Sovest, and if you can talk about kind of the pathway to becoming break even by year end, if that's still in the cards. Thank you.
Thank you, Chris. So we planned to reach a break-even by the end of this year in Sovest, but situation has changed, and as I mentioned before, we see deterioration of the portfolio itself, and as you may have noticed, we created a special reserve in the first quarter for the portfolio. But the problem not only in portfolio itself and cost of risk, the problem is also in revenue side, because the peculiarity of business model of Sovest is that we get main revenues not from interest, but from a transactional behavior of our customer. And What we see now is the number of transactions and what the payment volume decreased because of two reasons. The service is mainly offline payment vehicle, and due to lockdown, we lost a lot of retail point of sales in offline. And second, service operate in so-called traditional segment, which the consequence of prices on which are much higher than in, say, digital entertainment segment in which Qiwi Wallet is active. So at the moment, we don't foresee the possibility of break even for service this year, but we closely monitor our situation first, and then second, we are looking for different options to continue service operations, including partnership with other banks.
Okay, thank you.
Our next question is from Andrei Pavlov-Brusson with Goldman Sachs. Please proceed.
Good afternoon, it's Andrei Pavlov-Brusson from Goldman Sachs. Thanks a lot for the call. I've got a couple of questions. Maybe first of all, just wanted to start with a bit of a follow-up on service. Basically, I see that the net yield actually increased in the first quarter. So could you please elaborate on what's driving that? Is it basically declining volume that kind of increases the share of interest or anything else? And also maybe what was actually the cost of risk on your portfolio in the first quarter, and what was the part which was forward-looking versus the part that's related to deterioration, and also what should we expect in the coming quarters? I guess the second quarter also should be challenging there. So that's my first question, and maybe ask the following ones after.
Andrei, hello. Thank you for your question. First of all, on net revenue yield of service, that's mainly related. If you look at the press release, you can see that the volume showed pretty significant growth as compared to last year. And the key reason for the increase in yield is better monetization. So, as you know, part of our service includes selling value-added options for our customers, including opportunities to buy prolonged installments, to shop outside of the partner network, etc. So the penetration of these options increased, and this led to better monetization of the consumer base. That's for the net revenue yield. On core, so for the first quarter, as Boris said, we don't see any significant, in the first quarter we didn't see any significant, I would say, signs of negative dynamics. The core was in accordance with the previous year, so around 10-12% on average. And the reserves that the reserve allowances that we booked in this quarter, which are related to the restructuring programs introduced by the government and to the overall decreasing quality of the macroeconomic and operational environment, this was roughly, if I'm not mistaken, around 180 million rubles. So that's connected to the events that basically happened, what we call after the reporting date. So that's how we account for the deteriorating environment in April and May. As for core, we definitely expect that core would increase slightly. We're, as Boris said, monitoring the situation on a daily basis, both in terms of cost of risk and how the customers are repaying their current loans, their current debt. And of course, if we see any deterioration, we immediately take action that help us curb potential risks.
Thanks. And just if I may clarify, this revenue yield, do you think it's going to be sustainable in the coming quarters, although the volume, I guess, would decline in the second quarter definitely?
We see quite a strong effect from the worsening operating environment. Again, as Boris mentioned, because people shop less and the availability of funds is basically less. We believe that both payment volume and likely the yield and the yield are likely to decline in the second quarter.
Thanks. That's clear. And just a couple of other questions. First of all, maybe could you elaborate on what you see in their money remittances in April and May? And basically, as Andrei mentioned, that you may expect this to recover a bit slower, given that it's kind of related to the overall economic environment. So what's your current view there? Maybe if you could also break it down between their cross-border payments, the self-employed, and other subsegments there would be very helpful. And just a final question, you mentioned about some cost initiatives in the payments. So should we expect basically the growth rates in the payment costs to subside significantly from the second quarter, or would that be very gradual dynamics? That's it from me.
Yeah. Thank you, Andrei. For the money remittance part, we see mixed dynamics, I would say. So the biggest decline we observed in April and May is related to the self-employed piece, where the volumes decreased in the most way. At the same time, those are the categories where we believe we will see the growth as soon as limitations will be lifted, and we see potential there. For the more like classical money remittance and some remittance between the wallets and from the wallets to other cards and bank accounts, the volumes are not affected that much. But at the same time, we expect the negative dynamics will be longer because it will be more related to the overall macro situation rather than with the lockdown per se. So currently, as I said, the biggest decline is in the self-employed piece of the money remittance. For the future, we will see no longer effect for the classical money remittance and from the wallets to the bank cards and accounts. For the cost part of your question in the payment service segment, there will be gradual effect quarter by quarter. You will see it gradually. So we already made some measures actually in the first quarter. And we continued more roughly, I would say, in the second quarter. So we will see this in the next report.
Thanks, Andrei. Very helpful. Thanks a lot.
As a reminder, just star one on your telephone keypad if you would like to ask a question. Our next question is from Maria Sokhanova with BCS Global Markets. Please proceed.
Yes, good afternoon. I have two questions. The first one on your guidance. How comfortable are you with the way it is? So I understand there are a lot of moving parts, but would you say that so far situation develops in line with your best case scenario, or like you see some downside to that? And also within the guidance question, do you expect second quarter to be the weakest within the year, or you think third quarter will be weak as well? And second question on your dividends. I understand the payout would vary throughout the year, but if everything develops as you expect, would it be fair for us to expect the dividend absolute amount will increase in the next quarters? That's it from me.
Masha, hi. Thank you for your question. So for the guidance, of course, we're comfortable with it. That's why we reiterate it. Currently the situation does develop in accordance with the forecasts and expectations that we had in the end of March when we were providing the guidance first. Nothing changed materially as of now in our expectations as to significantly alter our expectations about the performance for the full year. As per the quarter dynamics, we do expect that the second quarter is likely to be weakest. However, the distribution between second and third quarter and the growth rate in between second and third quarter kind of can vary based on when and to what extent the limitations are lifted, the sports events are back, and the process with a couple of other internal processes as well. In this regard, we can expect the second quarter will be weakest, but we're still quite, I would say, we never provide the quarterly guidance, and we will prefer not to go into many details for the quarterly split as of now. On the dividends, as you know, the board of directors has approved the payout ratio of 50%, at least 50% of the adjusted net profit of the group. That's the annual payout that we're aiming for. And the quarterly numbers will vary in accordance with that. And as you know, we approve dividends quarterly. The board of directors approve dividends on a quarterly basis. So I would prefer not to comment on the dynamics as of now.
Okay, thank you.
Our next question is from Vladimir Bespalov with VTB Capital. Please proceed.
Thank you for taking my question. My first question, could you elaborate a little bit on the lower yield that we saw in money remittance vertical in the first quarter? What was behind that competitive pressure, the changes in volumes, and how, given what you see in terms of volumes in the second quarter, how this is going to develop? Then my second question would be on your bottom line guidance. Given that Service is going to perform much worse than probably you initially expected, and Tochka will be under pressure. So what are probably the sources of positive surprises maybe that allowed you to leave your full year guidance unchanged? And the third one, sorry if I missed it because there were some problems on my line, but could you elaborate a little bit on the betting volumes in April and May? How big was the decline of betting volumes? Thank you.
Thank you, Vladimir, for your question. I will take the first and the third one. For the money remittance first quarter yield, the main changes in the yield are due to the different product dynamic within the category. So the highest growth rate in the money remittance in the first quarter versus last year were in the self-employed payout to the self-employed, like the taxi companies and some other similar categories, where the yields are lower versus, for example, wallet payments from the wallets to other bank cards and accounts. So overall, I would say that the mix within the category was changing behind this growth rate in the lower margin but high growth categories. Overall, at the same time, within the same product, there is no significant changes in the yield. For your third question regarding the betting volume decrease in the April and May, yes, we of course observed a certain decrease around 25 to 30%. But at the same time, I would say it's stabilized in the mid-April, and we are on the more or less stable trend since then on this volume. We have I would say, moderate optimism looking forward as soon as some of the sports events already started. You know, probably the Bundesliga restarted this weekend. We saw some, I would say, pick up, so we will continue to monitor other sports events and the volumes recovering going forward.
And for your second question on the bottom line guidance, as you know, Vladimir, in 2019, the cost, the investments that we made in Rocketbank and Soitec were pretty significant. We expect that, however, the total investments in these two projects for this year will be below those that we have seen in 2019. And overall cost optimization, both across the projects of the group and to a certain extent in the payment services, would contribute primarily to the positive dynamic of group adjusted net profit.
Okay, thank you very much. And can I clarify with Andrei one more thing? Given what you said about the pressure on the yields in money remittance and on the trends that we see in the second quarter, I would assume that the yields could actually increase because self-employed are not performing well in the second quarter. Is this the right way to look at this situation?
I would say it's too early to say, but the changes might happen mainly due to the mix change in this period. So yes, it may increase if the mix will be positive, but I mean overall it will not be very good because it will be related to the decrease of the volume or in some categories more than in the others.
Okay, thank you very much.
Thank you, Vladimir.
Thank you, and this does conclude today's conference. You may disconnect your lines at this time, and thank you for your participation.